Hello, folks, and welcome to Real Estate Q&A. You know, I'm Greg Delane. This is my real estate show. This is to help anybody that needs to know the buying and selling parts of real estate. I always say experience is the difference, and I couldn't be more happier today than to have a good friend. He's been on the show before, but my friend here is the branch manager of Thoroughbred Mortgage. Without further ado, I want to give you Arthur Dimella.
Well, thank you. Very nice. Thanks, buddy.
Arthur,
Appreciate it. Yes.
I'm glad you're on the show. Mr. Dimella, I want you to give my audience a quick, give me 5 minutes of, I met you when I first started at Century 21 in 95.
A couple years ago.
Give us an update of how you have gotten to where you are today.
How'd we get here?
Yeah.
Yeah, well, I did. Yeah, I met you when I first got into this business about 23, 24-ish years ago. I started out, working with one of the banks and, spent my career in mortgage lending, loan originating. And then I had an opportunity to build a team. I worked with Bank of America, Wells Fargo, Countrywide back in the days. And I had a team of people. And then, after the industry meltdown, if you will, or the changes that took place.
The Big Short?
Yeah, right, the Big Short, that whole, got a lot of publicity and a lot of, banks failed and a lot of companies went out. But, I stayed the course and just kept originating my business and focusing on helping working class families. That's really what I do. I specialize in, helping myself and my loan officers help families obtain mortgages. That's what I just stuck to that. It's been up and down, more success, some failure, back and forth, but we just stayed at our core values and kept going. And then ultimately, our team ended up at Thoroughbred, which is a really, really good firm, and they're affiliated with Houlihan Lawrence. So I was happy to take the position.
Now, how long have they been with Houlihan? How did that come about?
So before I got there, Thoroughbred Mortgage is part of the Houlihan Lawrence family. They started their own mortgage company, I want to say about 12, 13 years ago, in and around that time. And just, trying to service, as you know, they have a tremendous market share, and they wanted to, provide their clients the service of financing. They also have a title company. But, we're open to use my clients, and my former realtors still work with me, and a lot of my book of business still works with us, and we're able to get a lot of deals done. They're a very good company, and the underwriting is very fair, very, very fair. So I find we're able to get a lot of deals done. I'm happy to be there. I really am very happy.
Well, let me just say this to the folks that are out here. One of my catchphrases on this show is that experience is the difference, and you wonder why some swimmer is better than the other one, or this guy in baseball is better. It's experience. The more you're in this business and the more you see the ups and downs makes the difference. And I always want to have people on this show that I trust and believe in, and Arthur Dimella is one of my biggest referrals. The guy knows the business. He's helped me with at least 25, 30 deals, helped me buy my own property. So, he has the stamp of knowledge, and that makes all the difference in the world.
Wasn't easy.
No. I will say this, though. In 2008, 2009, when they had the big crash, and listen, I lost some things then, too. You would think me being in the business, I would have known first. But if anything came out of that, it was that it cleared the real estate and mortgage industry of all the people that didn't know what they were doing. The people that could stay through that were the real professionals.
Right. Yeah. I mean, I thought of it as a curse at the time.
Yeah.
Because what happened was a lot of the products and opportunities for people to obtain financing was lessened. The funnel got really small. But as a result of that, what I learned was that made me more valuable.
There you go.
It made it so much harder to get a loan
that
someone needed me to say, well, you know what, let's do it this way, or, let's try this, or put a little more down, or, you really need to navigate it in order to get approved. Even now, it's still somewhat of cumbersome process with a lot of pitfalls. You can make mistakes and lose that opportunity. So, yeah, it was a blessing and a curse at the same time.
Yeah, I think that the right after that happened, most of the deals and homes that I sold or helped people get, a lot of the buyers were 3 to 6 months away from their credit being where they needed it to get something. Where as before it was 100% financing. Yeah.
I can tell you. Can I tell a quick story?
Please.
So I was with, I ran a very successful branch with Countrywide, as you know, back in the early 2000s, and right before all this went down. And it was weird because I experienced what happened before it really happened. And so what happened was we had a program where a person could buy a home, and it's crazy to say this now, in the last 10 years this hasn't been around, but you could purchase a home with no money down. Right, so it was 100% financing, and we would give you a 3% or allow for a 3% seller's concession to be worked in. So now you're not paying down payment, you're not paying any closing costs, and the person could have a 620 FICO score, which today you're barely making it. So I had a borrower who called about the program, and I quoted her what it would cost, and we went through the whole song and dance about the application. She turned to me and said, I can get a better deal somewhere else. That's when I knew there was a problem. There was a competitive market for that program. That's when you knew.
Listen, folks, a seller's concession means that you can pull out more money than the deal of the house, up to 3 to 6%. So say if the house is $300,000 and you can write the loan, or you can get the seller has to give this concession. You do the deal for $315. At the closing, you have a check for $15,000 waiting for you to help you with whatever you need.
Closing costs, or repairs or whatever.
Yeah, but to 100%.
No skin in the game is the phrase that we use.
Everybody was renting their houses.
Right.
So
those days are over.
When it happened, I could smell the rubber. I said, oh my God. And people just started walking away because they had no skin in the game.
That is the point. That is the biggest point. Now there are some still, and we'll get to that, I guess, there are still some low down payment programs that are available. But the biggest thing now is really the banks and Fannie Mae and FHA and Freddie Mac, they really put a lot of weight on down payment.
Yes.
So if you have a lower loan to value or a higher down payment, it makes it a little easier, and you get a much better rate too.
I can't, even today, Artie, I have people that will call me and say, Mr. Delane, I want to take a look at this house. I say, well, that's fine. That's why I'm in the business. Right. And when would you like to go see it? And are you working with a realtor now? One of the questions I'm going to ask is, are your financing in place? Have you been pre-approved? And they'll, well, what do you mean? Right. Unless you have a suitcase full of cash, who is loaning you the money?
Or daddy with a suitcase.
Somebody's got to have because if you don't have a suitcase full of cash, who can I call to verify that they're willing to loan you this money? And you got to find out what you're capable of borrowing, and you have to call professionals. Call Artie. And we're going to go over some of this, what you need to have in order to qualify to show what you can afford to borrow.
But I just want to make one key note on that point. Great point. And a lot of times with my realtors, including yourself and some other realtors and some of the Houlihan Lawrence people and some of my other agents, they'll call me because they're not comfortable asking that question. And I can tell you right now, you want to separate, the real deals from the tire kickers. Yeah. I come right out of the chute. I explain who I am. Listen, I'm here to help you. What do we have available as a down payment? And right out of the chute, either they have money or they don't have money. And I never say you can't get a loan. I never say no. I just say not right now. Listen, Greg, Joanne, Mr. Jones, you need another 3 to 6 months to save up $20,000, $30,000, because here in Westchester, and even a little worse in the boroughs, closing costs are very expensive here. People aren't used to it. So you probably have to, if you're not putting a lot down, you probably have to have an equal amount for down payment as closing costs. It happens to work out that way.
Well, I know early on when I first started at Century 21 Wolf, when we first met, I didn't have the confidence as a realtor to ask closing questions. I just felt like they were going to turn and say, "You, how dare you ask me what I can afford? Just you get out here and show me
next.
houses."
I'll work with the next guy.
Yeah. So I was, and I want you to do this. Okay. I was, I was just, please let me be in the business today. I showed a house the other day, and we were out in front of the house, and the guy was with his wife, and I said, "Okay, on a scale of 1 to 10, 10 being the highest, what was that we just saw?" And the guy looked at me, and I said, What do you think this is?" He said, "Well, it's a 7." I said, "It's a 7." He said, "Yeah." I said, "Well, why wasn't it an 8?" And then he started talking and explaining. But I would have never done that when I first started out.
That's a great way.
Because in my mind, I know based on what you can afford, that's a 10. So we might.
Or you're trying to read his mind, which you can never do. Right.
I'm not going to show for you all throughout
and then you
Westchester.
make a mistake too.
Yeah. What is that? He'll say, "Man, it's a 6, but it should have had this," and I wanted to back you. You got to help me help you hit the target. So, Artie, we got some questions here for you.
Fire away. I'm ready.
All right. Right. Here we go. How is the interest rate determined? I have people that call me and say, "Greg, what's the interest rate?" I'm not in that business. You got to call Artie. How is the interest rate determined?
Yeah, it's a really, we could spend a lot of time on that, but really the rate is based upon a couple of things, okay? It's based upon the cost of money. So the money that our company, which we're a direct lender, a bank, a Wells Fargo, a Bank of America, they have a cost of funds, right? The money costs them money, a certain amount, and then they lend it out at a little bit of a higher margin, right? So they make some money, right? We know that they're not non-for-profit organizations. They're trying to make money.
It's America.
Right, it's America, right. Okay. The beautiful. So there's one factor there. So the cost of money, that's a market-driven thing, right? The economy does well, markets are doing well, the Fed raises the rate, they manipulate the rates. That cost will determine whether the rates are 3 or 5. Now, within that range of whatever the cost of the money is and whatever your institution wants to make, there are risk factors that cause that rate to fluctuate as well.
Okay.
All right. So, for example, Fannie Mae and Freddie Mac, they have what's called loan level pricing adjustments. For example, if someone's coming to me putting 20% down with an 800 FICO score on a single family home, maybe one of the least risky transactions we do, right? 20% down or more, which is a really good down payment. We eliminate mortgage insurance. They have great credit, been on the job 10 years.
Yes.
Work for maybe City of White Plains, been around forever, and stability, and have good assets. Maybe 50,000 in reserves. After the closing, they still have 50,000. That's a very, very low risk borrower. They're going to get the best rate.
Okay.
As opposed to someone who puts down maybe 5% and has a 650 credit score, doesn't have the reserves, and maybe their income isn't exactly in line with where we want it to be. There's going to be add-ons to that. So that's how that works.
Yeah,
I don't know if that answered the question.
No. I totally get it. I want to let my people know that when I first got in this business in 94, 95, the people homes that I was representing to sell, their interest rate was 13%, 14%.
Well, we're definitely not there anymore.
Yeah, and it amazes me today when people are saying, "You can't do better than 3. I want a 2 point," and I'm like, when I first got in the business, the interest rates were 12, 13%, but that's.
You still hear some of that. I mean, real quick to finish on that point. We're probably somewhere in the high 3s, low 4s for most transactions. Mm-hmm. But then once in a while, you'll see some outlandish advertising on the internet, or you might even see it on TV with these crazy low rates. And a lot of times there's something else involved.
Yeah.
There's a buy down. You're paying to get the rate lower, so they advertise the lower rate. So usually all the banks are within an eighth of each other.
But those special things that you see you're only paying 1.5.
Right.
That's crazy, Eddie.
And at the bottom of the screen, there's this much legalese, right? That you can't even see.
What was that guy's name? Crazy Eddie?
Oh yeah, Akjar.
Yeah.
Antar, I think.
Yeah. All right. Next question.
Yes, sir.
How much money do I need to put down?
It's a good question. So there's several programs. Fannie Mae and Freddie Mac both have a 3% down program. Some of those programs have income restrictions.
Is that for first-time home
Yeah.
buyers, or if you?
I mean, it's really for anybody. I mean, they say first-time home buyer, so if you haven't had a home in a couple of years, you're still considered a first-time home buyer.
Okay.
Yeah, they just don't want you to use those programs to build your investment portfolio.
Yes.
And then FHA has a 3.5% down, which is, that's really that's for a loan up to, you can go up to $625,000
With an FHA?
with an FHA loan here in Westchester.
3.5% down.
3.5% down. The only downside to that one is that their MI on FHA is a little steep.
MI, what is that?
Mortgage insurance.
Mortgage insurance.
Yeah, it's a little high.
Okay.
So, but there's a trade-off. If you want to put less down, you're gonna have to pay a little higher payment.
Hey, if it gets you out of renting for $1,800 a month and you're giving your money away and you're going to actually own something, you got to crawl before you can walk. And listen, home ownership is. I used to say all the time that the 3 biggest decisions you'll ever make, financial decisions, and they're not in this order, but it's marriage,
I do.
children, and buying a home. Because that is something that you're going to be invested in dealing with for 20 years at least. You might switch the home, but those are major financial things.
Life moments there.
Yeah. Okay.
Yes, sir.
Next question. When can I lock the interest rate? If I'm getting a loan, when can I lock the interest rate so it's not going to go up to 6%?
So I'll answer this a particular way. I'll tell you what I tell my customers.
Come on.
Okay. So I've been doing this so long that this is what we tell them. So you're able to lock in at any time.
Really?
From the moment we take your loan application. As long as we've signed disclosures and you have the intent to proceed with us, we can lock it in. But here's the detriment to doing that so early in the process. The loans never close when we think they're going to close. You know that, right? Everyone has this.
You think?
It's a funny thing because everyone has such an optimistic attitude when we first sign the contracts. But then, appraisals, inspections,
yes.
Who goes on vacation, the attorney's away, the seller doesn't. I have a loan right now we're doing. The seller, my buyer is locked, ready to close for 2 weeks, and the rate lock expires, and that's one of the considerations. These things are not forever.
Yes.
They have certain time periods. So you lock in for 30, 45, 60,
yes.
90 days.
Yes.
And if you don't perform and we can't close, there's penalties for that. So now my borrower's shelling out for extensions and the seller hasn't moved out. So you got to kind of weigh that out along the way. So what I usually say is, look, there's 3 opportunities we could lock in. At application, which I really don't recommend, unless it's a refinance because you're in the house already. At commitment, once we get the loan approved, we have a clear idea of what conditions we have or how long it's going to take to schedule the closing.
Yes.
That's probably the best way time to lock in. Or 3 days prior to the closing, we could lock the loan. So right before the closing, we could lock it in if for some reason we were waiting to find out if someone was going to move out or whatever. So those are the 3 opportunities.
But you can actually lock it in soon.
You can lock it in. The problem is, though, just like anything else, right? If you lock it in too soon, 2 things happen. You're going to pay more because you're locking in for a longer period of time, and you might not close in time, and then you end up paying for an extension. So you got to manage it. That's why you need to work with someone that has done this before, and we've done probably 100,000 loans. So.
Yeah, I thought about that as I was driving over. I said, I know you personally have done well over 1,000 loans.
Oh, easily.
I'm just saying, you. Yeah. I'm not saying you're all your people that work under you, just you.
Right.
And let me get over here on this camera so I can tell you this. The three most beautiful words in the world in my business is not "I love you." It's clear to close. All right. Next one. Let's go to the next one.
Okay.
What is the estimated closing cost? People always say that. How much I'm going to close, and how much is that going to cost me?
Yeah, that's a real point of contention, and that's one of the things, when I first take a loan, or even before we take a loan application, when the team gets a borrower who's just, starting the process, and we really recommend that you call us to find out what you're qualified for before you involve the realtor. I really think that's the best way to go.
Please.
Yeah, we find out if there's any pitfalls with the credit. We find out if there's any issues with where you're getting your down payment from. Sometimes that becomes an issue. The bank doesn't like, any of these cash transactions. Everything has to be, documented.
Don't lease that $700 a month Mercedes.
Yeah, right.
Right before you're trying to do. Come on.
Right. I mean, you got to think like what you would want to do if you wanted to impress the bank. That's how you got to behave, right?
I like that.
So, closing costs. So, here are the questions, right? So, dependent upon the type of property that you're buying,
yes,
that's going to determine our closing costs. So, the least expensive transaction costs. I like to use transaction costs because closing costs has a connotation that it's bank fees, but that's not what it is. It's transaction costs. There are closing costs, which are one subset of the transaction fees. Then there are prepaid items, which is like your taxes, your insurance. That's stuff you're going to need to have. Prepaid interest. The bank starts the clock running right at the table. You pay a prorated payment at the table. That's one of the charges. Then you have attorneys and title and mortgage tax here in New York State. We're lucky to have that,
Mm-hmm.
I don't know why, but they tell me we're lucky to have it. It pays for something. So start with a co-op. There's a lot of co-ops here in White Plains. We have probably 1 out of every 6 or 7 transactions in White Plains is a co-op.
Really?
Yeah, we have a lot of co-ops. And they have the lowest transaction fees. Maybe $3,000 to $4,000 all in, regardless of price.
Of the co-op.
Regardless of price.
Really?
Has nothing to do with the loan amount. Has nothing to do with the purchase price.
Is that because it's a cooperatively owned?
It's because it is not considered real estate.
It's not on the deed.
And it's not taxed the way and it doesn't have the mortgage tax.
Yeah.
And it doesn't have all the lien searches. It doesn't just all that. The only transaction fees that a co-op buyer incurs are whether the co-op has a move-in fee or some kind of down payment for moving in. They have they've paid for board approval and some other documentation, a couple $100. They have an attorney, a title search, and then whatever the bank fees are. That's it. That's it.
Even if the co-op is $1.3 million.
Yep. Right. So that's where a first-time homebuyer could really get in a little with a little less money.
Yeah.
Now, when you take into account condos, single-family and multifamily homes, I would say here in Westchester and Yonkers is a little bit of its own element because they have their own mortgage tax, and the boroughs is probably a little bit higher. But I would say somewhere between 3.5% to 4.5% of the purchase price.
So if
or the loan amount really.
If the house is $315,000, the closing will be
maybe 10 or 11,000, something like that.
9,400.
I would say probably a little more than that, maybe
About
10 or 11,000. Yeah.
Okay. All right.
And a lot of it's driven by the taxes, and the best way, and what I was alluding to earlier was that, what we like to do on my team is we'll take all the information, we'll find out what you qualify for, and then we send out a very detailed cost estimate.
Yeah.
Here's what the loan payment is, here's your rate, here's the first payment at the closing, the taxes we're going to pick up, here's what's going to be due from a title point of view, from fees, searches, and
What's that,
mortgage
truth in
tax.
lending? The truth in lending statement?
That's what it's called, right?
Yeah.
A good faith estimate really is what we call it.
Okay.
Yep.
Listen, we're running down. I got to get another question into you, Artie.
I know. They're long answers.
Are there any other costs or fees I should know about?
Good question. Yes, there are. So obviously we're in the same industry,
yes,
just different arms. And other than the mortgage bank fees, there's going to be an appraisal fee. Usually between $400 and $500. You're looking at if the property, if they can't locate a legal survey, which is like that map of the property.
Section, block, and lot showing
right.
it.
If you can't find that, that could be potentially a cost that the buyer has to incur, and it could be as much as $800 to $1,000. I'm sure you've run across that. I have on occasion. Some other fees. I mean, other than an inspection, if you're buying in a building, there's going to be additional fees. In order for us to do our job, we have to get the financials for the condo or the co-op, and usually there's a questionnaire that we have to have filled out, and that could cost you up to a couple of $100 for that.
Yeah, because co-op boards, if you're buying in a building, it's a co-op board. Certainly, the fee for the application is
That's another one.
Yeah, yeah.
We have a questionnaire for every condo and co-op that we need to underwrite the loan to.
Wow.
Yeah, it's another 150 usually.
Okay, we got a little time. I want to squirt in this last one. What are the requirements today to buy a home?
Okay, in the time that we're left, I'm going to have to really. Here's the bottom line. One answer. Right now, you have to verify everything. We don't take anything for granted. There is no telling us. You got to show us everything on the tax returns, everything on the pay. There's no.
How many pay stubs do I have to bring in?
1 month's worth.
1 month.
2 years tax returns.
How much time does my money have to be in the bank before I?
60 days.
That's a great answer.
But keep in mind, FHA will allow 100% gift.
From you, you're going to loan them.
Or you can lend it to your kids. No, give it. No loan.
Yeah. Well, Arthur, listen, man. Thoroughbred Mortgage, Arthur Dimella. This is a good friend. He knows the business. Experience is the difference. All right, real quick, Arthur, we're about to wrap up.
Very good.
Who's your football team?
Well, I like the Jets.
Okay.
It might not be a popular answer. I don't know, but we're in New York, so I think I'm safe.
All right. Greatest. Who's your best fighter of all time?
That's easy. Tyson.
Mike Tyson.
Yeah, I like Tyson. I met him last year at an event. Yeah, it was great.
Well,
great.
listen.
Yes, sir.
Great having you on the show. Thank you so
my
much,
friend.
Arthur.
Oh, my pleasure. Thank you
right.
so much.